Welcome back to Alberta Primetime and our nightly vocal point now. In the Monday Money panel, the United Nations Food Price Index hit a record high in January. How soon might Albertans feel the spike? With answers tonight in Calgary. Beth Hamilton-Keene, a director and portfolio manager with Moore Investment Management. Shafik Hirani, director and a senior executive financial advisor at Investors Group Calgary. And in our main studio, Gordon Lusick, professor of international business at Grant MacEwan University. Welcome everyone to Alberta Primetime.
Thank you.
Hi there.
Hi. Well, Beth, let's start with you. The cost of corn has risen 83% on the year. High-quality bread wheat up 67% globally. Soya beans, 56%. Sugar prices are breaking records. Coffee, cattle, hog prices, all on the rise. Let's start with the reason. Why are world food prices spiking?
Well, when you look at it, it's the simple inflation, or inflation in food is based on the supply and demand. And certainly on the demand side, we're seeing real growth in emerging economies and really economies around the world. So that's contributing to the demand side. On the supply side, we've had weather-related issues. And so that's been bringing into question the supply available of a lot of these commodities.
And Shafik, commodities themselves playing a role. We know that food prices, only 20% of what you pay at the grocery store is related to the actual farm. What else are we paying for? And particularly other people like India, those regions paying up to 16% more this year.
Yeah, not just India, but it's across the world. The growth of food prices across India, China, Russia are like 15, 20%. Unfortunately, we haven't felt it as much in Alberta, which is around 1.5% in food inflation. But you know, it looks like it's going to get up to about 5% in the next little while. And you're seeing a lot of that with Canadian companies, with bids for agrium's profits going up, bids for potash, hostile takeovers. You know, there is quite the demand for those kind of companies right now.
Well, and I guess, Gordon, we've got things that get the food from the farm to the grocery store, and
right.
Are those playing a role in this spike?
That would play a role as well, because a lot of, you know, when we get grapes from Chile in winter, the cost of energy of shipping it is increasing too, because a lot of other commodities are increasing in price, and it's making it more expensive to get it to the table and to the stores.
Gordon, how long has this upward spike been building?
We've seen it for the last, well, it's been the last year. We've seen a 28% increase in FAO food prices. But if you take a look even back to early 2008, prices and other commodity prices of food were increasing rapidly, causing riots.
Yes, yeah. And we're seeing that now, of course, in Egypt and Tunisia and Yemen. Many analysts actually, Beth, believe that food prices could be a greater threat to world security than the current instability in the Middle East over oil. What do you think?
Well, certainly that's one thing to play into part here. Right now, when you look at emerging markets in particular, their CPI, or that inflation measure, the adding up all of the cost of goods and so forth, much higher percentage of that is food related. In Canada, we're a much lower percentage. Many of these developing areas and emerging markets, it's closer to 30% or sometimes higher. So it's a very dramatic impact into the lifestyle and really your whole survival in many of these areas. And so it certainly is a real risk and threat, not only from a survival standpoint, but from a political standpoint as well.
Shafik, why have we been sheltered so far?
I think because we live in a more commodity-driven economy, and I think things not just monetarily and fiscally, but I think politically things are a little bit more sound, not just in Alberta, but in Canada as a whole. So we've been able to shelter a lot of those food costs. I mean, it's a matter of supply and demand. The demand hasn't been as prevalent here, and the supply has actually been pretty good. I mean, there has been significant rains in Saskatchewan last year and the Russian drought 2 years ago. But overall in Canada, things have been a little bit easier than they have been across the globe.
There's two other factors that have been helping contribute to our sheltering here in Canada. One is certainly competition, as you can see, kind of the Walmarts coming in and so on and so forth. There's been more of a margin absorption or really kind of a middleman taking the hit impact.
So we shouldn't worry when American chains come in. That's necessarily not a bad thing.
No, Jen, because what's going to happen is they're going to start cutting out their portion sizes, so we're all going to consume less calories anyhow.
We do see smaller portions. Beth, your second point, and then we'll let Gordon have a chance.
The second point was currency. Certainly, we've been benefiting from an increase in currency relative to these many other countries. We are an importing nation of a lot of these food products, and of course, that's been helping us, the purchasing power of our inflated currency. That's not necessarily going to continue.
Gordon, you were probably going to mention the loonie
Right.
as well.
The loonie has actually appreciated against the U.S. dollar, and many of the commodities and food commodities are priced in U.S. dollars on the world markets. So they're traded on places like the Chicago exchanges and that. So at the same time that people are needing to buy the food products, there are people that are speculating in the markets as well. So if they expect the prices to go up, they might be more apt to speculate, thinking that they're going to go up and try to make money at it.
Where are we headed, though? Shafik sort of threw out a number, I think the 5% increase maybe in a year or two. And Shafik, correct me if I'm wrong, but I think the analysis that I've seen is showing that food prices will contribute to inflation reaching 5% in Canada within a year or two. We just really don't quite know how much we're going to be paying at the grocery store, how much more in the year or two ahead, is that correct?
There are so many factors that come into it. Competition in the sub-markets, the cost of energy, cost of, I mean, if you think of getting farm products to the table, farmer uses energy, oil for the tractors and things like that, and then it's shipped to markets, and who knows where the energy price is going to go. And you hear some estimates that it's already at $90 to $100, but maybe even more if crises and
well, and we know
places like
oil's
Egypt
going
occur.
up, not down, seems to be the indication.
Right.
Shafik, I'm curious about, aside from the fact that none of us like to pay more for food at the grocery store, and apparently we're going to have to, Canadian farmers, Alberta farmers, there must be some benefit here, especially if you're talking about a 67% increase in the price of high-quality wheat for bread. Hog prices, I mean, that's going to be good, isn't it?
It's got to be good as long as like Gordon said, there's two parts to the farming. One part is the hedging against the currency. The other part is speculating. As long as things like the weather and there's no scares come out, then yeah, it looks like really good news, not just for Albertans, but for farmers in Saskatchewan and so on.
We've got the French president vowing to make this an issue, rising food prices, make it an issue on the agenda of the next G20. Could we see it cause some real world turmoil? Gordon, going ahead.
I think, with the G20, you've got more of the emerging markets starting to be seen in there, and it's affecting them more. So, yeah, they'll bring that to the table. Whereas with the developed countries, we talked about how much StatsCan looks at the CPI for Canada, and 16% of our the index is related to food. So in these other,
being
the CPI, Consumer Price Index.
Right.
So you're seeing that in 30% or 40% of certain countries are going to be, their expenditures are food price, and that's
a lot of their paychecks.
That's right, and they're going to bring that to the table at the G20.
Well, next on the Monday Money panel, Alberta confidence is soaring. So why are we rated among the most fiscally vulnerable Canadians? Alberta Primetime returns in a moment. Welcome back to Alberta Primetime and the Monday Money panel. This month, several new reports show Alberta's economic confidence is soaring among consumers and businesses alike. But one report casts a shadow. TD's chief economist ranks Albertans as having the second worst household debt and money strain in Canada, behind only BC. Shafik, let's start with the good news. Why has confidence suddenly jumped so dramatically at this point in Alberta's very long, slow recovery?
Well, so far, Alberta's got the highest consumer confidence across Canada. So 61% of Albertans are confident that next year is going to be better, and 31% of Albertans spent more in Christmas than they intended to. So things are very rosy. I think the reason is because Albertans generally have more of a positive outlook, especially as it ties to the price of oil. And that seeing oil go from 60 to almost $100 over the last year has been very exciting for the general Albertan. And with the stock market recovering, things are looking a lot rosier than the nervousness feelings we had a year ago. So
we're going to talk a little bit more with our incredible relationship with oil in a moment and how it affects our psyches. First, Gordon, you're a professor of international business. Gauge the Alberta business side for us. Why are businesses so confident right now in this province?
Well, I think, again, we've been through a couple of tough years. People have been, we haven't been as affected as a lot of, if you take a look at a lot of states in the U.S. In terms of, what they're facing. They've had to pump liquidity into the economy, and we haven't had that as much, I don't think, in terms of the amount of money that's been put into it. But I think now, again, you're seeing that, as you get money into the oil industry, there's like a spin-off effect that people in the oil industry are going to be spending money, and they're going to be buying services and goods, and businesses that are providing those are going to do better off.
And so there's a genuine pickup in that sector, isn't there?
Exactly, yes. Yeah.
That is already underway. Beth, thoughts on the confidence?
Well, consumer confidence. Sorry, go ahead.
No, you've got the floor. Go right ahead.
Certainly, consumer confidence has been on the pickup, and a part of that is the expectations that jobs are going to be much better and more prolific, and our incomes are all going to go up and that type of thing. And we do have to be careful, though, about those expectations, because right now there's even a forecast there may be a labor shortage in Alberta in 2012, right, which seems pretty extreme from the time of March of 2009 when we were all quite worried.
Jen, I'd like to add one real quick thing. A lot of people don't understand, and I think it's a great timely topic, but there's a negative correlation between market performance, stock market performance, and consumer confidence. When consumer confidence generally is at its highest is when the market performance is the lowest, and vice versa. When consumer confidence is pretty low, that's when the markets tend to do well. So it's a contrarian indicator.
So let's take a look then at a bit of a contrary report. TD coming out and saying that we are among the most vulnerable Canadians in terms of our household debt, in terms of our strain. Shafik, take a stab at this. What exactly are they trying to say about Albertans?
Okay, well, I think they looked at who is vulnerable in terms of debt servicing ratio and debt to asset ratios. And Alberta, it was second, right behind BC in terms of vulnerability to sustainable drops in real estate. So basically, Albertans, although we're very confident, we are susceptible to getting hit the second worst in Canada should things falter, should real estate go down, and should, they just changed mortgage financing from 35 years to 30 years. We're very vulnerable to maybe increased bankruptcies, reduced GDP, lower unemployment. We have a lot of susceptibility because we're so highly leveraged.
And Beth, being that leverage, really, things change when the interest rates change, don't they?
Right, and that's where we're really most vulnerable, according to this research report, is that as interest rates begin to go up, and at this point, there's no question that they're going to go up. The real question is going to be how quickly, and how quickly will it hurt us, essentially, in terms of being able to service our debt, be able to pay off those lines of credits, or really continue to make those payments, because that's really where the impact's going to be. The other side of it, however, is how much will the costs of general living continue to go up? Going back to the inflation question from the earlier segment, even the farmer, as much as they're going to see higher commodity prices, are going to see increased expenses. And we're going to see that right throughout every consumer in Alberta. As we see interest rates go up, we'll see higher costs of servicing that debt, probably higher costs of everything else. In fact, gasoline was one of the most inflated items last quarter.
And Gordon, are Albertans drawn into a bit of a boom mentality when it comes to spending, that we go crazy when there's a boom, and maybe even when there's not, well, there's another boom around the corner?
Well, yeah, that's the old line, which is, please God, give us another boom, and we promise we won't screw it up this time. And I think, we have that kind of a mentality that, we tend to not save, we tend to, put money into whatever we're doing, whether it's buying, houses and things like that. And we don't tend to think about, the old ant and grasshopper story and putting a little bit away.
Yeah.
We take it that this is something that may not last forever, so enjoy it while we do. So there's a bit of a mentality there.
It doesn't seem that it's changing anytime soon, at least according to the chief economist at TD Bank. Yeah. Thank you all for your insights tonight.
Thank you.
Thanks, Jen.
Thank you.
Beth Hamilton-Keene is with Moore Investment Management Calgary, Shafik Hirani of Investors Group Calgary, and Gordon Lusick from Grant MacEwan University joining us tonight.